So let's break down today's action, the whole week's action. Tom Lydon from ETF Trends with 2 ways for you to play the rising U.S. dollar. Eric Marshall from the Hodges Fund. He's here with 3 picks for you to add to your portfolio. And joining us from the CME, we got 2 of the best. Fox Business contributor Phil Flynn and Joe Cusick from Moneyblock. Phil, let's talk about oil. What happened? I mean, what was it that made it spike so much?
It was a combination of factors, Dave. Everybody was short this market. Hedge funds had the biggest short position in over 4 years. And today's the last day of the month, and hedge funds generally like to lock in those profits so they can get paid, and that went up. But what really accelerated the market, Dave, today were a couple of things. We saw that Baker Hughes rig count. We have seen the biggest drop in rigs in this country in over 24 years right now. This week's rig count was the biggest that we've seen week over week. And since the drop in rig counts began, that's a sign that we're really going to see U.S. oil production start to level off, if not decline later in the year. So this is coming fast and furious. We've also had this incredible week of every energy company talking about capital expenditure cuts. That's going to take its toll on production, not just here in the U.S., but globally. You put it all together, everybody's getting out of these short positions and looking towards a market that could actually continue this spike next week.
But Joe, as you spin it forward to next week and you guys look at the E-minis and the S&P futures, what happened in these last couple of minutes of trade that would have dropped this market to its knees?
Well, I think right now everyone saw the move in the bonds, really. You saw it up at the long end at 151. I mean, I didn't expect this pullback going into the close, I'll tell you that much, even though we were buying some VIX options going into midday today because volatility has just been all over the map. You got the curve in a really weird position. So right now, you just basically saw going into this weekend that we typically didn't see that volatility or that premium come out into the weekend. It's staying in there, Liz, and I'm telling you right now, this is an ugly close going into next week.
It is an ugly close. S&P below 2,000. Tom Lydon, I got to ask you about the Russell 2000, small and mid-sized caps getting hammered today. It's the biggest downward movement of all the indices we follow, and yet you like mid and small cap stocks. Why?
Well, I think what we're going to find, David, is when it gets traction, everything reverts back to the mean. Last year, small cap didn't do anything.
All right, let me stop you there. Would you consider, after a 2% drop in this day alone, a trashing of the Russell 2000 small and mid-sized caps?
One step further, David, I think it's a great buying opportunity. The other thing to remember, as far as small caps, mostly they're doing the business here in the U.S. It's the big multinationals that are getting hit by rising dollar because exports are going to go down. So if you want to just play a dollar move, small caps from a valuation standpoint are looking much better.
Well, that's true. Although, as we bring Eric Marshall into the conversation, Eric, I think that Tom is right. I mean, the smaller names don't have as much exposure to international currency gyrations, and yet you saw the Russell get clobbered today. What's going on there, and how would you play the equity land?
Well, at the Hodges Funds, we're finding opportunities in the small caps. However, not all small caps are created equal. So you got to take advantage of some of this volatility and some of the turbulence that we're seeing around earnings season and really take advantage of individual stock selection. So I think within the small cap stocks, you can look for companies that don't have a lot of foreign currency exposure and aren't necessarily dependent on what commodity prices do as well.
Well, you've got 3 names here: Lithia Motors, Eagle Materials, and Fortinet. These are 3 diverse companies here. Is there a common thread that runs through them?
Well, that's a great example. I mean, in the case of Lithia, we're seeing a benefit from the consumer improving and the upgrade cycle for automotives. With Eagle, it's a case where the building materials, gypsum wallboard, and cement are doing very well, and they're really being penalized because a small portion of their business is tied to the energy sector, which we think is more than discounted in the stock. And then with Fortinet, they're in network security, and this is a secular growth opportunity that isn't necessarily dependent on what happens with the broader economy or what happens in the foreign exchange markets.
Phil Flynn, gold. One day it's down $25, the next day it's up $28.50. What's going on with gold?
You know, it is so erratic, Dave, right now. I mean, it doesn't know what to focus on. That is the problem. You know, on one hand, you have these incredibly strong deflationary pressures, which normally drive gold lower. You know, but yesterday you had Janet Yellen speaking in front of a lot of Democrats saying, hey, you know, I know the economy's getting better, but we're not going to raise rates anytime soon. That brought the gold back right now. But I think what's really happening in the stock market right now, and I think what's happening in the gold market right now, is we're seeing fear back into this market. Going into the weekend, people do not like to see what's going on with
so it's a
Greece
fear
right
play.
now. What's going on with Europe. It is a fear play right now. Very simple.
Joe, we cannot finish this conversation without bringing up something you touched upon. Treasury yields 1.66 for the 10-year. That is a huge manifestation of fear in this market. Why?
Yeah. Well, I think, first of all, when you see international rates in negative, and whether it's in Europe or in the Far East, you see Greece pulling out of the EU. Where are they going to park their money? That's where the money's coming from.
Pfizer.
They're not buying stocks. They're going to buy something that has a risk-free rate. So bottom line is that even if they're having these low yields, that's where the money's coming from, which really, really makes a lot of traders get a little bit nervous. And you're seeing that. You're not seeing the dip buyers come in here. And I'll tell you, as far as looking also with the small caps and everything like that, be very careful going into the next couple weeks. We're in really dangerous territory right now.
Tom, we are in dangerous territory, but I don't think we're in as dangerous territory as the Europeans or even the Asians, if you want to talk about it. I know they're not going into recession yet, but it is slowing way down. They're printing more money all over the world. We may or may not be raising rates, but at least we're not printing money as fast as they are right now. Doesn't that mean the dollar is a good place to park your money or to make a bet on right now?
It is, David, and there are two specific ETFs, one by PowerShares, one by Wisdom Tree. The PowerShares UUP is specific to developed nations, so it's going to have more of effect by declining dollar, and it's done very, very well. The Wisdom Tree, more of a emerging market balance with developed nations, USDU. Great opportunities, even if you have some money market, because that actually kicks off a little bit of a yield. And if you feel that this dollar appreciation, euro decline is in the early innings, it makes sense diversifying there.
That's exactly what Howard Lutnick said in Davos. He's loved the dollar for 2 years now, Cantor Fitzgerald, but he said you gotta love the dollar. So there's the play for that one. Eric, before we go, you know, do you see a black swan out there on the international landscape that tells you just stay U.S.?
You know, not necessarily, but I do think that the U.S. is in much better shape. And when you look at the earnings power of the companies in the U.S. economy, we see opportunities out there for owning productive assets that make sense even in this environment.
Okay, guys, very quickly, who's it going to be? Starting with Tom Lydon on Sunday.
Patriots 28-21.
Wow, we even got a score. Eric, what do you think?
Yeah.
Well, I think the Super Bowl indicator, I have to go with the Seahawks because the market does better if the NFC wins.
And we don't have any time here. Phil, quickly, who's going to win?
Seahawks. Anybody that can beat the Packers is okay
Joe,
with me.
quickly.
All right, Phil and I are going to go at it Seahawks, even though I'm a Packer fan.
All right.